All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the 6th of October, 2025. Look, I wanted to pick up on gold, and I'm going to do a little quick update, basically on gold. I did a big video last week. You can check it out on our Markets.com YouTube channel. Yeah, gold is flying high. I talked about gold this morning in my Markets Talk webinar as well. You can check it out. But anyway, look, this is a separate video. Let's have a look. But first, before we take a look, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, we know that gold is slowly creeping up to a very nice, beautiful round number, which I'll mention in a bit. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, by the way, it's a new announcement. I mean, I'm gonna hold another webinar. This is gonna be the third webinar of the series, not my third webinar in general, but the third webinar of the series where I look at top indicators and then apply it in real life market action on our demo account just to see if those indicators actually do work, so we have the viewers joining in. It's a live discussion. Everybody can communicate, everybody can discuss. So feel free to register. You can find the link in the description of this video. And yeah, we'll go from there. So, ladies and gentlemen, without further ado, let's check out what's happening with gold. Look, gold right now is on a rocket ship. It's flying towards that psychological 4,000 level, and I talked about this in one of my previous videos. Like I said, last week I talked about the situation here in gold. I've mentioned here that watch this if you are trading gold. Now, this video you can check out. So basically, what I was saying that, look, I'm still bullish. I mean, gold was hitting like that 3,800, and I said to you, I'm still bullish. I'm still bullish because there is hype. There is hype, and there is this little fear moment in a way, and because everybody's purchasing gold right now despite the stock market being at record levels, at record highs. And let me just show you a quick glance here. Look at this. Dow rallied on Friday. The S&P kind of calmed down a little bit together with Nasdaq, but still they're at record highs. And this is one of those moments where yes, everybody's buying gold, and they're trying to, because I think that everybody thinks that there will be some profit taking on the table, and the stock market could reverse course a little bit. So everybody's jumping into something safer, like gold, silver. Silver's on fire as well. I'll pick up on that. Only currencies like the yen and the Swiss franc are kind of a little bit on the questionable side in terms of having that safe haven status. Well, with the yen in general, after the election during this weekend, the yen kind of just devalued very quickly because of the new person who was elected, the first woman, the first female prime minister of Japan. There we go. And we know that she is very pro cuts. We know that the BOJ is planning to do a hike in October, but she's very pro cut. So that's not very supportive of the Japanese yen, and that's where the problem arises for the yen being a safe haven. Anyway, coming back to gold situation, so everybody's kind of just searching for that optimal park your money spot. And yeah, of course, metals come in play very, very nicely here. And look at this. So the technical picture shows me this, that I have drawn this Fibonacci extension, and I've drawn it from the lowest point of April of this year to the highest point of April of this year and to the lowest point of May of this year. And there we go. We're aiming for that 161.8% on the Fibonacci extension, which is around the 4,000 zone here. So the 4,000 psychological level, it's like everybody's talking about it, and I think that we were at 3,000. We were just at 3,000 in the beginning of this year, right? And everybody was like, "Wow, crazy, 3,000! Oh my God! Like we're gonna hit 3,000. We're gonna reverse back down." Um, yeah, kind of. We hit the 3,000, almost 3,000, then we reversed back down. Then we traveled to 3,000, we surpassed the 3,000, then only then we kind of corrected back down. So, look, I'm not saying that the 4,000 is kind of that resistance, that top resistance from where the index, or sorry, where the commodity is going to reverse back down. No, because look, when the whole market expects something, right? And we're talking about symbolism. The market participants love symbolism. So everybody's now talking about the 4,000. So probably there's going to be a lot of sell stops here on the on around 4,000. Everybody's going to putting their sell orders. So when it's going to hit 4,000, it's going to reverse back down. So that's the ideal world, right? Look, I would say don't rush, okay? Because what could happen in a way, we could see, a surpass of that 4,000 zone. We could see, even a stronger move to the upside. And if we are trying to draw some comparisons in history, so this is where I will use my magic powers of the monthly chart. So look, this already here, this move to the upside, it's great. It's wonderful. If you remember a while ago, if you have been watching my videos a while ago, I mean about like April time, May time, June time, I was talking about on the daily chart. I was talking about this idea here. I was talking about this little possible kind of ascending triangle pattern here, and look how well it worked out. So that's something that I'm happy about very much. And look, it worked like a charm. This is the triangle, and hey, what can I say? Technical analysis working at its best here. Nevertheless, we got rid of the triangle. We no longer need it. Now we're focusing on something else. Now I'm focusing on the monthly chart, because this to me looks very parabolic. And as we know, whatever comes up sharply must come down sharply as well. Look, these previous rallies where we kind of had a relatively gradual rally, I would say, a relatively gradual strong rally. This worked out nicely, right? Then we corrected back down, but it was something of a gradual correction. If we go back into history, and if we look at these scenarios right here, so back in 2011 here, we also rallied, almost hit that 2000. If you remember, if you're old enough like me to remember this rally here, we almost hit the 2000, and yes, we kind of then nicely corrected back down, and it was a very prolonged correction, I would say, reaching the areas almost the area around 1000. So from 1,900 and something 20, we almost traveled to 1,000. So we almost slashed 1,000 in gold price. So I mean, that was a spectacular move. If we draw a Fibonacci from these lows here all the way to the all the way here, you'll see that we have corrected 50%. We have corrected 50% from from these lows here back in 1999, all the way when we rallied to 2011. This was like a very prolonged rally, about 12 years, something like that. Then we corrected back down in a matter of, let me just say, about 4 years, 5 years. Yep, we corrected back down. We corrected to 50%. And look, we had similar stuff here back in, let me just show you the year. We had similar stuff here back in 1980, where we also we rallied hyperbolically. Look at this move. Look at this crazy move in a way. And then we corrected back to the downside. Look, there was a very decent correction. Again, a similar story. Let's have a look at the Fibonacci. Draw this one here. Look, fantastic move, all the way below actually the 61.8, almost getting closer to 78.6 on the Fibonacci retracement. Now that was a significant correction. So what's stopping us kind of from examining a similar scenario here? So nothing. We're looking at history. if we look at the Fibonacci, and now the question is here, if we do look at the Fibonacci retracement on a bigger picture here, where do we draw it from? We draw it from here, from the lowest point of 2022, or actually we draw it from the, let's say, lowest point of 2015. If it's 2015, then that's also logical, because again, it's a decade that we have been rallying, rallying significantly. If we're ignoring this kind of correction here, then yeah, we can draw it all the way here and try to maybe guess where the next potential correction could be. But if it's 4,000, then you'll see perfectly the 50% kind of sitting around here near this lowest point of November of 2024. But again, we don't know that, so it's really going to be like very speculative here. So let's wait for that correction first, because what if we get a very strong rally, like a major shoot up, like we had here back in 2019, 1980. Yep, there we go, January 1980. Had a major rally, then it corrected back down the same month, and then we saw like a reversal back down. So, like I said, I'm being open-minded. I do expect, let's say, the 4,000 getting hit, but then I'm also considering maybe the higher level as well. It wouldn't be surprising to me if we would, let's say, go towards 4,400 or something, and but in a matter of, let's say, a few days, like a major spike, something like that. And if I get something like that, a very big rally in a matter of few days, now that's for me would be a little bit of a bearish indication, to be honest. However, I'm not saying that yet. I'm seeing a very steep rally. There is demand. We cannot really say anything. Like if I'm going to draw the Fibonacci from here, then you can also, like I said, try to consider some of these levels here. Look, but this is for later. Okay, don't try to predict way too much, because again, we try to plan, and God laughs, right? So for now, let's just go with the flow, see see where the potential reversal could happen. At the moment, looking at the daily chart, I think that's the best right now at this point. Aim for that 4,000, and then we'll see the price action. Don't worry if you think that you might miss out on capturing the peak, for example, for a short. Look, don't do that. Don't think this way. Just kind of approach it with caution, and just have enough funds to support the movement. You need to allow the position to walk a little bit. Sometimes it's in your favor, sometimes it's against your favor. So against your kind of not in your favor. There we go. Against your favor, not in your favor. So like I said, you need to allow the position to walk. You need to have a good risk management. So if you're worried about every little dollar there, then maybe you have a bad risk management approach, and maybe you're risking too much. So just be careful on that side. For now, like I said, let's see what's going to happen with the 4,000, and then we'll go from there. Okay, so ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. And look, a quick update on silver. Actually, before I wanted to show you this one. $50. I think that we're on the right track as well for $50. Maybe we can actually overshoot that as well. So, and I am considering a possible little overshoot, and I'm aiming actually for something around closer to 50 and a half, 51, maybe closer to that level. Let's see if that's going to happen or not. Anyway, ladies and gentlemen, thank you very much for watching and listening. Let me know if this helps, and let me know in the comments what you think. Do you agree or not? And we'll go from there. Have a beautiful trading day wherever you are, and I shall see you later. Bye-bye.